Are we ready, folks? Come on in. Take your front seats. You're looking really pretty. And let the comments roll in. And so we will begin the show that we deserve. The show that we deserve. It's so good we can't take a break. It's so beautiful, right? You can't take a break. Anybody can be lazy. Everybody can be lazy. But not we. Not us. Mr. Head at Home says, I'm Vetri, by the way. Good morning. Is it a male name or is it a female name? Vetri, what does it? Could you please shed some light on it? Vetri? That's a very beautiful name, but is it male? Yes. I assume it's a South Indian name, right? And it's a big name, but short is Vetri. Is that true? Am I right with my guess there? Or did I just, make a wrong? Yes, I'm from Tamil Nadu. I get it. I'm Raja Vetrival. Yes, that's what I was thinking. Beautiful name, Mr. Raja Vetrival. Thank you so much because it was very awkward to call you, Mr. Head at Home. But anyway, so if you are ready and if you can hear me, we can begin, right? The show that we deserve. All good. Beautiful. So I'll just check myself on LinkedIn once. Beautiful. So we are live on YouTube. We are live on LinkedIn. I've sent messages to people. And so we should begin the show that we deserve. Everybody can be lazy, but we are never lazy, It's so good, the show, the best part of the day, or great beginning, let's say, that we do it every day without fail. Bum 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 bum. Good morning, everybody. Welcome to Thinker's Frequency. We're having such a good time. This is the peak of human civilization. We're working so hard, doing such good work for ourselves, our parents, our kids, our siblings, our husbands, our wives, our friends, everybody. Well, not other people's husbands and wives, I hope. And just when we thought things couldn't get any better, like they couldn't possibly get any better, well, they just did. Call it divine intervention, folks, but things just got a whole lot better. Now we have Thinker's Frequency, our daily mental workout, our daily dose of insights and analysis which don't lead to paralysis right before we punch in. So let's continue with our journey of reading between the lines, things that are especially interesting and important in the world of business and finance. Let's go! But before we go, we got to follow a tradition, right? You know the tradition. You know the sweet and sacred tradition of the simultaneous sip. We'll all sip something together and it'll bring us good luck, as it always does, without fail. And all you need for the simultaneous sip is a copper, mug, a glass, a tank, a chalice, a stein, a canteen jug, a flask, or a vessel of any kind. Pour it with your favorite liquid. I like hot water with some black pepper in it. And here we go. My God, it was beautiful. Let's do it again. Sublime. You know what the simultaneous sip says, right? You know what it says? It says that you are not alone. It says that we are in this together. And that's such a beautiful thing to say. With that out of the way, let's begin. Now, did you notice we are together in this, says Mr. Kumar. Thank you so much. Did you notice what happened to defense stocks yesterday? Did you see where defense stocks went yesterday? GRSE went up 10%. HAL went up some 3%, 3-4%. Mascot went up 5%, and so on and so forth, right? BEL went up some 3.5-4%. All the defense stocks really rallied up yesterday. Now, do you remember? Now, this is very important. Do you remember what we said about defense stocks a couple of months ago? So, viewers of Thinkers Frequency would remember that all the analysts, the stock analysts, had said that defense stocks have are overvalued now and they've lost their steam, and we don't see a significant upside, or we don't see an upside in the defense sector stocks anymore, right? So that was the reading of all the analysts just a couple of months ago, or maybe a quarter ago, right? That's when defense stocks peaked. And I said at that time that, whatever happens, like in the recent future, maybe a couple of weeks or a couple of months, the defense stocks will have significant upsides this year itself. I said in the long term, and then I corrected myself and said, when I say long term, I don't mean 3 years or 5 years. I mean like 3 to 6 months or a year at max, right? And then I said very clearly, and it was a pretty badass statement. It's me against the analysts on this one, right? And if you look at time since then, maybe a quarter ago, and since then, defense stocks have only outperformed the market. The index has grown 19% when the rest of the index has basically grown like 13 to 14%. And that's not even counting the upshoot, which is beginning as far as the defense play is considered. So we were right, and all of these analysts were wrong. And it's pretty awesome to be right, right? Now, why did we come to that conclusion? Or why did we have that kind of prediction about the defense sector, right? We said it was all fundamental. I didn't look at a chart, I didn't look at like a candlestick growth or something, Mizuhari graph or whatever. I didn't look at all that. We said that India is spending 1.9% of GDP on defense, when the average, the recommended range is about 3.5%. When Pakistan spends 2.8, 2.9%, when China spends 3.1% or whatever, something of that sort, right? I said, and we very categorically said that defense, there's a lot of upside that they are not seeing as far as the defense play is considered. And then we also talked about how India needs to have a vertically integrated defense manufacturing play, because that determines where the country can grow. Because defense is a very large thing, right? Defense is cybersecurity, defense is drone security, defense is weapons, defense is when you're making weapons, you're basically, going into metals. So defense has its implications in all sectors, and an investment in defense is an investment in India. And India will need to make that investment. And as those deals get cleared, so there were also a lot of pending deals, you're gonna see that the sector is treated differently. And all the analysts said there's no room for they even gave sell ratings to the defense stocks, right? And I said it's me against those one. And Mr. Tiwari says, you also said that allocation to defense will go up in the budget as well. If that comes out to be true, good opportunity still for making money. And yes, I stick with that, Mr. Tiwari. I stick with that. I think India will essentially bulge it up a little. Now, I'm not saying that from 1.9 we'll straight away go to 3.5, right? But from 1.9, we might just be able to look at like 2.2, 2.3. Maybe even 2.4 if we are very aggressive, right? And that will change the world. That will literally change the world. But the point is, we were right. We turned out to be right, and these people turned out to be wrong, right? I wish somebody could make like clips of these episodes. Like imagine a clip where we look at that episode where we say, oh, defense, these guys have given defense a wrong rating, and then cut to we're right. It would be so awesome, right? Maybe someday. But anyway, that was for predictions. So we were saying that we were fundamentally, as we always say, the way to look into the future is to see stories evolving as a process instead of, uh, you know, uh, what do we call it? Museum pieces, right? You don't look at history as a collection of museum pieces, right? You look at it as a process, or look at it as a story. And when you look at it as a story, uh, you can look at it in the future, right? Because stories have a way of evolving themselves. So it's very interesting. I'm very happy to be doing this, and I'm so happy that you've been, if you bought defense stocks, congratulations, right? If you didn't, don't worry at all, because the world will keep presenting opportunities to us, right? We just have to be looking out for them, and that's it. Mr. Headed Home says, I liked your, I'm sorry, Mr. Vetri says, Raja Vetrival, I liked your Ether analysis on Substack too. Yeah, thank you. So Ether, not just Ether, if you looked at Urban Company, one of my analysis on Urban Company, which went really viral. I've been talking about Urban Company for quite a while. I've written a lot about those guys even before. Their stock was, their IPO was subscribed 103 times. 103 times. Can you imagine how the market perceived that particular stock? So, we saw this coming. And it's not just the IPO. So I'm not saying that the Urban Company will have a good IPO. Any company can have a good IPO. What I'm saying is, and as I wrote in that analysis, that if the management sticks together, if the founding team sticks together, the Urban Company will be a multi-bagger. So now let me talk about my Urban Company if we are talking about it. So when you look at India's consumption, okay, if you look at consumption, the FMCG consumption, what is the proxy for India's FMCG consumption? HUL, right? But what would be the new age proxy for India's consumption? What would be the new age company that can be a good proxy for India's consumption? The answer is Zomato. Okay, Zomato is a new age company which is essentially a proxy for India's consumption story. They were earlier, just a food delivery play, but now since they are in the quick commerce play and e-commerce and so on and so forth, it's consumption, right? So you're looking at and that is the quick commerce play is a dirty business. It doesn't make money, whatever the problem is, but they get their position as the proxy for Indian consumption story is considered, right? It had been very weak for a very long time. Maybe it flips, maybe it doesn't, but that's the product consumption play. What do you think is the proxy for India's service consumption play? Is there any proxy for India's service consumption play? And when I say service consumption, I don't say service consumption by businesses, right? Which is essentially Just Dial, because Just Dial is a B2B company, essentially, right? They have a C angle, so B2B2C. But Just Dial is just a listing marketplace, right? So what is the services proxy of the entire country, essentially? It's Urban Company, right? And if that is a good proxy for the way Indians consume services, daily essential services, you can imagine where the stock might go, right? And I'm all good feelings for the founders because they were our clients. We worked extensively with Urban Company, my first company, and they are very nice people as well. So Mr. Abhiraj Bal is a very kind person, and he's very nice. So moving on. I just lost my train of thought talking about Urban. We were supposed to talk about the FPI path, right? So FPI path to India is new rule book for IPOs. So we've been talking about how India is trying to court FPIs because FPIs have been net sellers in the Indian equity story, Indian capital story for a significant period of time, right? FPIs have been taking money away from India. And while Madam Sitharaman has said that it's actually a very good thing, right? It's good that they are being able to exit when they want. If they're being able to make money but not take money, it's not a good sign. So we are happy that these people are doing. But at the same time, FPI's exiting is not a good look on the country's capital market, right? And despite the fact that whatever FPIs have exited, the market has been sustained and supported by much more retail inflows, domestic inflows. So India has been trying to court these people in a lot of ways. So we've discussed the ways that they've tried to do that. One was a very unusual way of gift city, right? So they asked Indian family businesses, family offices to invest through gift cities so that that money comes to India in the form of FPIs, right? That was number one. Number two was they reduced the size which was necessary for that particular investor to come in, right? That was 80 crores earlier, it's now 25 crores. Then they also set up an automated window for clearing those investments, right? Then there was also an IPO entry for these people. So SEBI lowers stake sale floor, allows anchor book quota for insurers and pension funds. So we also talked about how they had like 100% FDI on insurers, and we said how insurance companies have a lot of float which goes into the capital markets. We've discussed about insurance float and how that money goes into the capital markets. So I hope, since we don't have a lot of viewers, I'm assuming these are old viewers of Thinkers Frequency, so I don't need to explain that again. So you know, India has been trying to do all of that, and at the moment, FPIs are still in the selling mode, but that's they're doing everything they can to change the game, right? Automatic window enables simplified market access, easing IPO for the likes of Geo, NSE, REITs, real estate investment trusts, get equity status, making them eligible for inclusion in equity indices. Total anchor portion of limit increased to 40% from current 33%. PE fund threshold cut to 25 crores, which was 80 crores earlier. Simple disclosure rules, AIF scheme planned, scale-based threshold linked to turnover size. So we've talked a lot about this, and a lot of these, moves might lead to something or might not. We discussed why FPIs were actually exiting India. FPIs say that Indian market is a bit overvalued right now. Price to earnings of 21.97, which is lower than the historical average of India's price to earnings, right? The market. So modestly priced as far as India's history is considered. However, Hong Kong is getting valued at 11.2 or something, 12 price to index, price to earnings. So other markets are looking slightly more attractive. But the real reason is, that's not the real reason. The real reason, which is reading between the lines, is that India doesn't have the greenfield, new age AI opportunities, and most of the growth that is coming in these markets, in the Hong Kong exchange or in the US exchange, wherever, most of that is basically coming from the AI led play or AI adjacent play, and India doesn't have a comparable there. So that's one of the reasons, not the only reason of course, but one of the reasons. And remember where you heard it first. Retail inflation climbs up to 2.1%. India's inflation in control, man. Great job. It was 1.6, in the last measure in July. It's 2.1, still way below 4.4% of the RBI's target range. One second. I hope you're taking sips, right? Sips is what keeps everything. Sips are what keep. What would be the right way? Sips are what keep everything going. Oh man. Anyway, so retail inflation pretty much in control, right? Experts expect MPC to hold policy rate steady in its next meeting. So we were talking about how RBI might just be looking at further rate cuts, and then it was like, we're gonna wait and watch because 1% of rate cuts have already happened in net level, right? So that's gonna stay. No rate cuts for now. Moving on. India aims for 2 PSBs on world top 20 list by 2047. So right now, HDFC and SBI are at 73 and 43 respectively in the top 100 global banks. They want these two banks or some other bank, if they can catch up, but practically that won't be possible, to reach to top 20. Top 20 is huge, man. So this is a pretty weird and a, you know, crazy goal. Prepare PSBs for the next phase of growth, keeping in mind the goal of Vikasit Bharat in 2047. I don't understand how Vikasit Bharat has something to do with concentration of banking power. Shouldn't there be more smaller banks which are like roughly the same size instead of two big, really big, too big to fail kind of banks? Isn't it like counterintuitive, or let's say a little weird to think about, since we've learned so much about Too Big to Fail? By the way, Too Big to Fail is a very good book. It's about the US crisis of 2008, and it talks about how these banks essentially screwed everything up, and how things were changed, and so on and so forth. There's also a documentary drama movie made on Too Big to Fail. Very good, good work. BBC, I guess, made it. Terrific work, and you could definitely watch it. But point is, that was a digression. Why would the country aim at two PSBs in World Top 20 instead of having, let's say, five PSBs in World Top 100? What do you think would be a better, way to go about things? Five PSBs in uh, top 100, or two PSBs in top 20? I think the latter. Anyway, moving on. Leg up for infra projects with 20,000 crore guarantee. So, uh, center has tried to boost the cash flow. The government plans to set up 20,000 crore risk guarantee fund for the infrastructure sector to boost investments. People privy to the development said. This is yet again in another. It's another story to essentially uh, boost private capex, right? So you have like a risk-free guarantee scheme of 20,000 crores, which will be invoked if any loss happens due to some policy, regulatory uncertainty or reversal or any sort of thing. So the company can choose to, claim that particular loss as a part of this particular fund. So this is designed to make it easy, for these companies to decide whether they want to invest in the in the country. However, uh, this doesn't really work yet again. Why do I say it doesn't really sound like a smart thing to do? I mean, it is better than nothing. Ideally, you should be talking about how to make those regulation or that regulatory environment more predictable, right? This is like, hey, this thing is screwed, but because it's screwed, we have something, in case you get screwed, here's some ointment, right? That's what it is. So fund based on risk premiums will be managed by NCG TC government to provide initial corpus, expected to attract more infra investments as loan will be backed by the fund. Developers will also get loans at cheaper rates, share risk premium, right? For the proposed fund that will cover losses caused by policy uncertainty and non-commercial reasons. So good try, but again, the fundamental problems need to be solved, and this more or less looks like a bandage to a big problem. A very good news, however, good policies, leading to good outcomes, is for India Inc. Home is where the part is. That's a very good headline. Props to the writer. Now, what they are saying is that India's automotive sector, and not just automotive sector, India's manufacturing sector's import bill has been going down. That's amazing, right? So what they said was that they want to indigenize the production, right? Bring production home. Right now, what these companies used to do was they used to just import parts, right? Not automotive companies, but definitely electronics companies, definitely toy companies, and so on and so forth. So what they're saying is that PLI schemes bring savings to the forex, because let's say if you're making something and most of it is coming from outside, it's a good start, but not really the way to go, right? So the government's strong thrust on localizing production and sourcing to curb costly imports and foster a domestic manufacturing ecosystem is starting to bear fruit. An ET study of 20 large publicly listed consumer facing companies across automobiles, electronics, and FMCG companies showed that their foreign exchange outflows as a percentage of sales came down in FY 25. So if you look at these companies, Dixon Technologies share of imports plunged to 6% in FY25 from 49% in FY20. So they used to basically import 49% in 2020, 5 years ago, and it's down to 6%. That's just extraordinary. Uh, and this is the ratio of total sales. So let's say their revenue, half of their revenue was going to imports, right? Now it's down to 6%, which is just beautiful news, right? And then there's local value addition due to production linked incentives has gone up to 40 to 45% to 60 to 75% in the last 5 years in ACs and LEDs and lightings and so on and so forth. Hero has also shown decline. All the Maruti Suzuki, all these companies, these automotive companies, even the electronics companies are showing declines. Now this is extraordinary, man. This is huge. This is just next level stuff, right? Forex outgo earlier, you know, Bajaj Electronics 339 crores in FY20. It's down to 178 crores. Amber 796 crores. Maruti Suzuki 9,000 crores to FY is 9,400 crores. Earlier it was 11.5%. Now it's 9% and so on and so on. So these companies have been growing, but their import bills as a percentage of sales have been going down, which is just beautiful. PLI, production linked incentives, good scheme, good scheme. Change the smartphone manufacturing game, changes the country. Now we talked about how when I said in a couple of episodes or maybe a week ago I said that India needs more manufacturing. To which Mr. Tiwari said, "Hey, does US really need manufacturing job?" I guess when was that? I don't remember, but it was a very strong conversation on why manufacturing is very important in India, right? And I said, so somebody wrote me a message that, hey, why did you say that service sector doesn't contribute as much to economy as manufacturing effect? Why did you say the downstream effects, or let's say cascading effects or second order effects of manufacturing are higher? So I'll clear that now. Let's say you run an outsourcing shop, you run Infosys, right? What you do is you hire people, and those people work on their equipment. The equipment isn't a lot, it's basically a computer. So they buy computers or they buy whatever they want to buy, right? And they work. And their time is the service, right? Infosys or all these companies run on a time and material play. So their time is the sell, right? And that's where the story ends. So Infosys sells to these companies who sell to Infosys. Infosys pays to employees, and that's it. That's where the value ends, right? And then that person might just buy something. That's the consumption story. That happens everywhere. But that's the second order effects, right? That's it. With a manufacturing company, let's say you are making toys and you're selling to the same country, US, right? You make toys. What do you have to do to make toys? Let's say if you're making toys made of wood, you'll need to import wood, you'll need to import bamboo, you'll need to import some binding material, you'll need to import, when I say import, you'll need to order packaging material, some printing material, you'll need to import a lot of things, right? From wood to precision materials to make those woods, from those precision materials, actually the refining of them, the production, the printing, the packaging. There's a lot of materials which are to be put together to make a product, right? I use the simplest example, toys, but you get that, right? It also needs a lot of action with a lot of moving parts. Now this company sold to US. So the US bought from this company. This company bought from 5 other companies. Now 5 other companies had 5 kinds of employees, right? So you see, there's another level of value that is generated with manufacturing, which doesn't get generated at all with services industry. So that's a big problem. right? And that's why we should be very happy with this particular play. So earlier, these people were just draining money out to China and packaging it in US. Oh, sorry, in India, but now they're actually making it, right? So maybe Mr. Ashwini Vaishnav is onto something when he says that India's value addition by 2035. I don't believe in 10-year projections at all, but he says by 2035, India's value addition will be equal to that of China. That will be at 38%. Right now, it's at 20%. So maybe he's on to something, right? What do you think? Moving on. What Oracle didn't foresee techies millions in a moment. So we've talked a lot about Oracle and how Mr. Larry Ellison is now the world's richest man or something, close to that, $400 billion and whatnot, right? The stock went up because Oracle started dealing in the cloud space, right? It became a competitor to Amazon, Microsoft, Google, all of a sudden, and that sort of picked its stuff. It signed a very big deal with OpenAI and so on and so forth. Now, a lot of people working at Oracle obviously had some restricted stock units, RSUs. Now those stock units matured and those people became millionaires all of a sudden, right? They're rich people now, essentially, and in like material terms, they can actually, look at selling that stock sometime whenever it's eligible to sell, and they'll be like real dollar millionaires, crores in net worth. So this once again proves, man, what is life, right? What is essentially now. All props to Oracle for venturing into cloud and so on and so forth. It's gonna build those capacities because it doesn't have them right now. But a lot of people, when they say that, I worked hard, or I built my career, or I built my company, you didn't build shit, man. Uh, it's all essentially things that are beyond your control. Now look at that techie who's like, there's some techie they've given an example of. He's like a 25-year-old BTech guy from a good college, joined Oracle Bangalore in 2022, and his net worth is at 1.5 crore after Oracle stock surged in its history. Another 22-year-old guy got 60 lakh in RSUs vested in 3 years. Current value is in 1.2 crores. So now these people might just give gyan on how they built their career, but in truth, they're just lucky, right? Things beyond your control. Which is what always brings me to Woody Allen sir's quote. But just think of Nepal right now, right? Nepal burnt. A lot of people lost their jobs. A lot of shops just closed and they'll never open again, right? A lot of people just got demolished, right? The businesses got demolished. Like Chaudhry's, the great business guys, right? The YY people, YY noodles, if you know, great product. They were supposed to have a joint venture with Balaji. All of that is shelved, right? Maybe it starts, maybe it doesn't. Balajis are lucky. Many businesses won't be that lucky. They will be shut down forever, man. They'll be caught in the fire. What was their fault, right? To get ruined? There was none. It was just, and that is where the Woody Allen sir's quote really comes in handy, right? The man who said, "I'd rather be lucky than good," saw deeply into life. People are often afraid to admit what greater part of life is dependent on luck. How much of life is beyond our control. It's like a match where the ball at the nick of the moment hits the net, and with a little luck it goes forwards and you win. And sometimes it doesn't and you lose. Match point. Great. Always reminds me, these things, these flash moments, they really, you know, look at Manipur. Manipur has gotten 7,000 crores worth projects. PM Modi has gone to Manipur, looking at displays. What's an average Meite's fault in Manipur, right? They just got steamrolled for nothing. Anyway, moving on. A bit of a philosophical rumination, but let's move forward. We won't talk about Nepal anymore. We won't talk about politics either, because it's dumb. It's dumb, man. If you look at political discussions, We're so happy. I'm so glad that my brother gave me an advice, and also viewers of Thinkers Frequency, Mr. Patil, Mr. Tarun, and Mr. Tiwari also, if I remember correctly, Mr. Kumar. They said, "Hey, let's not discuss politics. It's gonna take time. It's gonna be negative, and so on and so forth." And they were so right, because if you whatever optimism that this show gives you, it would just become and it'll flip 180 if we start talking politics. So we are so glad that we don't talk politics. Anyway, GE Vernova to sell industrial software unit to TPG for 600 million. That's some PE action happening right there. Geo Airtel double down on AI cloud to drive growth. So people are talking how AI and cloud are telco adjacent industries, and how Indian industries, you know, like Geo and Airtel could actually benefit from that play. And Airtel has already got a plan called Nextra, I believe, and Geo already is tied up with Google and so on and so forth. India's cloud market is set to reach 58 billion in 2030 from 15 billion currently, and AI could add 1.5 trillion to GDP by 2030. So if you look at what Airtel is doing, for small and mid-market enterprises, Geo is targeting aggressive pricing by bundling cloud connectivity, and Geo is collaborating with Microsoft Azure to offer cloud modernization services. And of course, Airtel, along with its data center subsidiary Nextra, is targeting the market segment that requires sovereign cloud. So we've talked a lot. Now, this is in continuation with what we discussed just now, right? What did we discuss? That India doesn't have any representation as far as the AI cloud play is considered, right? And what do you hear now? So this is all connected, and maybe these companies position themselves in a way that they make the Indian market attractive by bringing in the AI narrative, right? Very possible, not probable, but very possible. Uh, Reliance Industries, AI ready data center, Bharti data center subsidiary Nextra, dedicated Google Cloud region, plans to add this, that. Yeah, we've talked about this. Moving on, government likely to pick 7 AI startups for India AI initiative. So just like India has a semiconductor mission, India also had an AI mission, which I didn't really know about. But yeah, they do. And Servom AI and all of these players, they're going to pick 7 AI startups to build LRM series, right? Large reasoning models, 118 crores. That's basically chicken shit, right? But a lot of billions of parameters. Bharat Jan, a consortium of IIT researchers anchored by IIT Bombay, is also expected to receive a nod. And Tech Mahindra is on. In January this year, Electronics and IT Manufacturing Ministry had announced an allocation of incentives of 1,500 crores. A lot of applications came in, but nothing is really panned out there. Uh, Myntra and Flipkart essentially came out with their earnings. Flipkart Internet's FY25 revenue is up to 20,000 crores. Flipkart is going to look at an IPO in India. Myntra's also revenue went up, but its net profit actually went 18x, right? 548 crores. So that's huge. Uh, yeah, from nearly. So these people have done a typo there. Their revenue rises 18%. Actually, it's 18x. Uh, Huge. But Flipkart, the reading of the situation will be incomplete. So a lot of people think that Flipkart Internet is Flipkart business and all, right? But that's not true. So Flipkart Internet is a 20,000 crore revenue company. Last year it was 17,000. Flipkart B2B arm is where the real revenue generation happens for Flipkart. That's like 70,000 crores. So overall, Flipkart generates the group about 1 lakh crore in revenue, right? But Flipkart Internet is the marketplace arm, and Flipkart B2B is Flipkart B2B essentially, right? Amazon is also in the same range, some 25,000 crores for the marketplace arm, then 5,000 crores for the B2B arm. That's why Amazon is much smaller than Flipkart in India in the overall scheme of things, right? Maybe moving on, a lot of people don't know that. There's also another case as far as Myntra and Flipkart is concerned. So the Myntra was always a more profitable business, right? Fashion was the only play which made any money for e-commerce because high ticket value and so on, good margins. Fashion, again, I'll say it again. Fashion was the only play which made money for e-commerce, and people knew that it will be the only way which makes money, right? Now the question is, then why did Myntra get acquired by Flipkart and not the other way around? Because Mukesh Bansal sir and Sachin Bansal and Benny Bansal sir, they started at the same time, about the same time, and Myntra really had a lot of things going on for it, right? Flipkart also had a lot of things going on for it. Flipkart really, just brought the Amazon model. They started with books and so on and so forth. But essentially, Myntra should have been the clear winner in the play, right? Investors should have chosen Myntra, but they chose Flipkart over Myntra, and then Myntra ended up getting acquired, even though Myntra was the better business, right? It was the better business. It is still the better business. Now, this, if you want to read about this, if you're interested in this story, there's a book called The Big Billion Startup. It's written by Mr. Mahir Dalal. I've done a podcast with him years ago. It's Flipkart's biography. Great book. Pretty cinematic. Very good book. Mr. Tiwari asks, hey, but fashion has high returns as well, right? Fashion has a lot of returns. A lot of returns. But that's the seller's problem, right? The platform still able to make money. Moving on. Apollo Hospital buying IFC's 31% stake in AHLL. A lot of PE action happening in hospitals. We've talked a lot about this. This is not the first. This is not the last. Hyderabad Biz Duo buys Delhi. Oh, what am I talking about? Paramount boss David Ellison plans $41 billion Warner Brothers bid. So David Ellison is Mr. Larry Ellison's son, and he's looking at buying Warner Brothers Discovery and combining it and so on and so forth, right? So that's a $35 billion company with a lot of debt, man. $41 billion company with $35 billion in debt. But of course, Ellisons have the muscle to bring them together. So as far as that play is considered, Comcast is the huge company, very huge. In comparison to Comcast, this particular company is a bit small. It owns CBS News, CNN, Warner Brothers Discovery, right? A lot of HBO as well. So a lot of properties. And Mr. David Ellison is looking at buying this particular play. $41 billion, but a joke to him. Moving on. Paint companies may get some color as the rains retreat. We've talked a lot about paint companies at Thinkers Frequency. Viewers of Thinkers Frequency would remember how paint companies fell apart. At least the incumbents. You know why? Because monsoons happened, a lot of things happened, consumption wasn't happening. And then two players entered into the play. One was Birla, a very big player in the construction play, perhaps the largest cement guy, Ultratech. And then JSW also entered the paint business by acquiring AkzoNobel, the Japanese company. Dulux. That was AkzoNobel. JSW bought it. So incumbents, which were essentially Asian Paints and Berger Paints, they really had tough times to beat, right? Kansai Narolac, and so on and so forth. So they might just be getting some sort of color back because monsoons have retreated and consumption is going to pick up. A lot of activity is going to pick up. The loans will get cheaper. The repo rate decrease is translating, and so on and so forth. So paint companies might just be looking at good times. Hue kicks in. September quarter earnings likely lower. Birla Opus, we talked about this. Moving on, FMCG companies to get a volume boost, we've talked about. More roads may lead to auto consolidation. Rothschild executive. Electrification, rising need for capital by references may force companies to collaborate. Yeah, that's true. Automotive companies might be looking at some sort of consolidation at this play. Not surprising. Vedanta unit has settled a dispute with Chinese company Sepco Electric. So Vedanta, essentially the Talwandi Sabu plant, they're looking at a demerger. But Sepco Electric, the Chinese company, had some stake in it. So they were against it. And lawyers made money, but lawyers wouldn't be able to make money anymore because it has settled. Moving on. Mr. Nitin Gadkari has come out with a statement. Fiery as always. One second. I hope you're taking the sips, folks. Very nice sips. Phasing out old vehicles could fetch 40,000 crore in GST. So, Mr. Gadkari has been a very big proponent of vehicle scrapping, right? Some of his moves really backfired because it was his influence that led to the Delhi policy of not providing fuel to old vehicles, which was a very terrible decision. It was an absolutely weird decision. Thank God, it didn't go ahead. So, but he's still on that spiel. He says phasing out old vehicles is very important for the country because we have a lot of old vehicles. Scrapping industry is something great, right? The auto parts component, that becomes cheaper. This leads to better economy, cleaner vehicles. It leads to better demand as far as new vehicle sales are considered. He says that these companies, if a person comes up with a scrap certificate of an old car, they should get a 5% discount on a new vehicle. And he says this might look like charity, but it's not, because it's going to give demand. So he's been a big proponent of vehicle scrapping. While it's good on paper, it's good on paper, I'm of the belief that you cannot give it an option, incentivize it, but just don't force it on people, man. You can't steal people's cars because you want to sell more, right? Auto industry's lackadaisical financial position is not the average Akash's problem. What do you think about that? Does that make sense to you? Again, I'll say it again. The auto industry's lackadaisical financial performance is not the problem of the average Akash, right? You can't steal his car away because he's holding an old car. But here's the economic case he makes. Center and states could earn 40,000 in goods and services tax if all the 9.7 million unfit and polluting vehicles in the country are scrapped, says Mr. Gadkari. Total of 3 lakh such vehicles have been scrapped till August, including 1,41,000 government vehicles. Now you can do whatever you want with the government vehicles. That's okay. According to our estimate, there are 9.7 million unfit and polluting vehicles which we need to scrap. The first question is, according to our estimate, what is the basis of your estimate, sir? Could we have a look at that calculation? Because that will be very important. You say 9.7 million cars are unfit and polluting, right? Where did you come with that number? Where did that number come from? Number one. Second, 7 million jobs will be created and 40,000 crore will go to the center and state if all unfit and polluting vehicles will be scrapped, he says. According to Mr. Gadkari, almost 17,000 vehicles being scrapped on average every month, and the private sector has invested 2,700 crores in setting scrapping centers. Well, that's good. That's good. Whatever voluntary scrapping is happening, it's great, right? He says government has implemented voluntary vehicle fleet modernization program or vehicle scrapping policy for creating an ecosystem to phase out unfit cars. I agree. I have no problems with that. Then I talked about the 5% play. Yeah. So that's what he's saying. Now I'm fine with the industry. I love the fact that these people are talking about vehicle scrapping as an industry because, it'll create a circular economy, which is beautiful. Just don't force people to essentially, destroy, or just don't take their cars away. You can have norms for pollution and so on and so forth, and that'll be great. If a car fails to pass that test, if a car is truly unfit and polluting, you should take it away, but not basis age as a number, right? That's what I'm against. But that's just my opinion. As the dude said, well, that's just your opinion, man. Have you watched The Big Lebowski? Has anybody watched The Big Lebowski here? Yeah, well, that's just like your opinion, man. Anyway, moving on. CBIC orders price tracking of 54 items. CBIC is Central Board of Indirect Taxes. Mr. Tiwari has a comment. If the pollution is a problem, just stop issuing POC to that car. Pollution certificate, right? Yeah, that's exactly what they do. What I'm saying, right? If pollution is the problem, check those cars thoroughly and don't give them POC, and that's how you can basically get them to discard. Sir, आपकी car तो pollute बहुत कर रही है, and that's fair. I would hate to see a car which is like throwing all the smoke on the road, right? But if a car is doing well, if it's a good POC, they've maintained it very well, they've not run it so much, and the car just got old without actually having miles to it, you shouldn't take that car away. Anyway, moving on. CBIC's order price tracking for 54 products. We talked about this. A lot of people were concerned that, hey, what about anti-profiteering? How will they actually implement anti-profiteering, right? What if companies just use the reduced GST and pocket all the money, which is obviously the first principle, instinct for these companies. That's what the CBIC is tracking. They want to see the prices going down, right? Over 120K opium licenses to be issued. The government will issue more licenses for opium cultivation in crop, finance ministry said, right? So that's poppy farming that's happening. Weird, very weird. Moving on. US couldn't convince Europe to essentially tariff India and China. Now notice the change of tone, right? India and China. You tariff China and India. The G7 is another block, and even they are not agreeing to whatever is happening, right? So India and China getting some pressure, but at least it's not India anymore. Mr. Trump has course corrected, which is nice. What is not nice is, if you're talking geopolitics, Brazil's ex-president Bolsonaro has been sentenced for 27 years, right? For plotting, not executing, plotting a coup to stay in power. Now this is called lawfare. This is what was happening to Trump as well, right? He was getting all sorts of lawfaring. This is what happens in shitty democracies, where you just jail your political opponent, or you just lawfare your political opponent to death, right? This is a classic example of a shitty democracy, a shoddy democracy, a lie for a democracy. There's a very good quote, by the way. I don't remember who said it, but it was a pretty good quote. It says, "For my friends, nothing. For my enemies, the law," right? And that's what you do. If you're a shoddy democracy, you start jailing your political opponents. 27 years. So Trump is saying it's a very bad thing. I'll tariff this country to hell. Moving on. US has destroyed contraceptives meant for developing nations. So USAID used to have a lot of female contraceptives, and US has just destroyed them. 9.71, almost $10 million worth of contraceptives. People wanted to buy them. They said no. What were these contraceptives? Pills, intrauterine devices, and hormonal implants. So they've just gone out of fashion, right? All of that stuff is out of the play. Moving on. A trader hits an instant 5 million jackpot with Warner Brothers bet. An investor is up about 5 million after taking a bullish options position in Warner Brothers Discovery just hours before a media report that Paramount Skydance is preparing to buy a majority stake. You got lucky. Or was it insider trading? Who knows? Who knows? Moving on. Nifty closes above 25,000. They're saying that in some time, Nifty can touch 28,500 by June next year. 28,000. That's huge. Upsides in beaten down IT pack, in Trump talk, Infosys share buyback, US trade deal, and defense stocks as one of the reasons, right? Companies bond to long end of the curve as GSEC yields fall. So companies are going to the bond markets because GSEC yields have fallen. New bonds get more attractive, right? So that's what's happening. We've discussed a lot about corporate bonds, right? Sovereign bonds, corporate bonds. Sovereign bonds essentially pave the way for corporate bonds. So it's very, very interesting. Wall Street went up 4%. It was huge. Record highs on trains or track of weekly gains. Very interesting. Moving on. A case happening against WhatsApp for data safety and privacy. Privacy is a myth. Privacy is a myth, right? There is no privacy. I heard Mr. Scott Adams saying something very interesting in that, right? He said, "What is your only defense uh, for against lack of privacy?" Because whoever says privacy is like a real thing is just deluded, right? Because there is no privacy. If they want, they can just what how WhatsApp works, right? And you know that if somebody wants, they can get any message that you ever did in any platform, right? So what is your real defense against privacy? Your real defense against privacy is to not be interesting. is to not be is to be boring and inconsequential, right? Because if you're not interesting or if you're not very important, there will be no incentive for the government or any authority to actually snoop into your life. And that's such an interesting way to look at privacy, right? That is so freaking interesting. Anyway, uh, SC calls for IBC overhaul revival fund for stressed housing projects. Says right to housing seeks stronger protection for home buyers. So a lot has been happening as far as this play is considered, right? Projects got a green shade and they're happening. So a lot is moving on in that direction. India essentially wants the housing thing, especially the mid-market housing, that to fly. Because whatever growth has happened as far as the housing projects are considered, at least in the metropolitans, they've been at the upper end of the spectrum, like the far end of the spectrum, the ultra premium, ultra luxury. That kind of spectrum has taken all the sunlight. So they want some sort of mid-market to affordable housing play to come forward. Because as viewers of Thinkers Frequency remember, you might remember we talked about this, that this is the segment which is very underserved and poorly served, and it's also a very big problem for the middle class because they're not being able to afford houses, right? And we also talked about Mr. Tucker Carlson's reading of an economy. If a young guy making average salary can afford a good home, nice home, that's when the economy is doing well, right? And right now, at least the metropolitans can't say that. Moving on. SC not to release 5,000 crore for Sahara depositor refunds. Well, that's okay. Adani to buy toll roads operator for 1,300 crores. TOT was the operator's name, right? DP Jan TOT toll roads bought. Fairfax selling Saurashtra freight for 662 crores. You see, logistics becoming an attractive sector. A lot of PE action starting to happen. We've talked about that. Road has the answers to everything. If you want to look at an economy, if you want to look at the country, just look at its roads, right? If the roads are good, if it's easy to transport material, if it's easy to transport people, things will find a way, right? The problem is that Indian roads have really fallen apart lately. Mr. Nitin Gadkari had a very strong interview. We discussed it in depth, where he said the highways, now will get good quality. In the middle, he was trying to fight cartelization. He said that these builders and these constructors, they were like cartelizing and they were overcharging the government. So what I did was I enabled smaller companies to compete for these projects. Now these smaller companies came up with better pricing. We went up with them and they screwed up the quality. That was our mistake. So he admitted it beautifully. But it's not just highways. If you look at there's a viral news, right, of a Bangalore school bus getting derailed because of a road getting submerged in water or something. How pathetic is that, man? How pathetic is that? At the end of the day, good policies, great policies at a macro level lead to some impact, but the ground is what the ground is, right? So road has the answers to everything. I hope we get good quality roads to at least not die while we are traveling, right? With that, ladies and gentlemen, we come to the end of the 111th episode of Thinkers Frequency. 111, 111, an auspicious number. We have come to the end. Our daily mental workout, our daily dose of insights and analysis, which don't lead to paralysis, right? Before we punch in, it's 9:08. We should punch in anytime. I wish you a beautiful day personally and professionally. I'll see you tomorrow, same place, same time, hopefully. I need to thank Mr. Raja Vitrival, Mr. Rajakumar. Thank you so much, Mr. Kumar, for all the labels on the episodes. You've reached like 50, 60 episodes. Soon we'll be having all the episodes. If you continue at your pace, we'll be having all these shows indexed, right? All the 100 and odd episodes, and that'll be beautiful, right? People will be just amazing. Mr. Tiwari, thank you. Mr. Satish, congratulations, Nishant. 111 is a great number. Yeah, 111 without breaks. Not one holiday for us, right? So we didn't take a break for 111 days. That's nice. That's nice. So, and everybody else who joined, thank you for joining. Thank you for commenting. It makes me very happy. It's because of you that I end up reading in depth. Otherwise, my business doesn't require me to, read in so much depth, right? I'm not a trader, but this thing has been paying for itself because of my stock gains. As I said, I just doubled my money in 100 days because of whatever I learned while going this deep and discussing it with you. So if, let's say, Mr. Kumar or Mr. Patil or Mr. Tarun Tiwari Mr. Tushar Tiwari or Mr. Tarun didn't join it, right? If there were no regular viewers of Thinkers Frequency, maybe I would have just quit it, right? After 50 episodes, I would have been like, yeah, koi dekh raha hai, let's just drop it, right? I'll read it in my own comfort, and then I wouldn't have read, right? But thanks to the regular viewers of Thinkers Frequency, Mr. Kumar, Mr. Tiwari, Mr. Patil, Mr. Tarun, a lot of people, Mr. Jindal, everybody. Thank you so much, and I hope this keeps on. Mr. Celestial, Anhad, Kakashi Hatake. Congrats, Nishant. Good luck with it. With this thing. Oh, it's fun. It's fun. Thank you. Thank you so much. Please take care. If somebody has any questions, we still have a couple of minutes. It's 9:10. We can punch in a couple of minutes. Till then, I'll take a few sips. Same here. I made money too, says Mr. Kumar. Oh, touch wood. Touch wood. So if we are talking about money, Mr. Kumar, a lot of people feel very happy that they make money through, looking into the future. And that's great. We look into the future. But I'll give you a problem with what we are doing here. Okay? We are going very micro. We are going very deep. We are going very current. What happens is, with going so current, you lose track. Sometimes we try to not do that, but we sometimes lose track of the overall picture. And the best way to make money is to not lose money. Okay? The best way to make money, again, it's not me who said it, probably Warren Buffett, sir, or somebody, or Nassim Taleb, sir, right? He's the one who talks about tail events, right? The best way to make money is to not lose money. And how do people lose money? They make a lot of money. Let's say you doubled or tripled your money 4 times or whatever. And then a crash comes, right? And when that crash comes, it wipes out all your earnings and then some. So you end up losing more than what you made, and in fact more than what you had. So the most important part for us is to see the crash coming, right? Nitin Kamath sir, the founder of Zerodha, how did he make so much money? How could he bootstrapped Zerodha? Because he was short in 2008, right? 2008. So he was short then. So we'll have to be very careful. We'll have to have some money, sparked just to make sure that we can, benefit when the thing crashes. Because something can happen, right? Who knows what can happen? We got to be prepared for that eventuality. While we make money, just be sure of that. But I'm so happy for you. Congratulations. Touch wood. Mr. Celestial Anhad Kakashi Hatake again says, I work with your brother, my manager. Oh, so he sent me this song of yours, which I really enjoyed. Wishing you luck in your journey. Oh, so you're so sweet of you. Thank you so much. Good morning, Bhaiya, says Archit. Good morning to you. And with that, we should go. So have a beautiful day. Take care. Bye bye.